Good morning. It's Friday, June 20th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I was just on CNBC discussing the dollar index here. It's one of my favorite programs, a worldwide exchange. It sets you up for the trading day ahead. Frank Holland, he's a great commentator, and I really like doing that show. The only issue is you got to get up at about 3:15 a.m. Central Time to get it done. So look a little bit tired on the screen here, and it's going to be set for a long day because I'll be on the Schwab Network towards the close of the trading session here, breaking down next week ahead what to watch here and some key developments in a few different commodities. I usually touch base on gold, silver, crude oil, and also Bitcoin. So looking at the markets here, you do have U.S. equity futures. They are slightly lower as we head into the final trading session of the week. The markets did test. Now this was yesterday, and remember yesterday was a holiday trading session. Also, some of the geopolitical risks really were heating up Wednesday leading into the Thursday session, and traders were quite nervous. That's why we saw a lot of liquidation take place. So the markets did test that low from Friday, June 13th at 59.79, and actually got about as low as 59.69.5 before the close, the 1 p.m. shortened trading session close. You get news that President Trump will take his time to think about any kind of U.S. strikes on Iran and allow the negotiations still to continue. So from that close, he makes the announcement. He oftentimes does this. And then you saw the market gap higher here as that session reopened at 5 p.m. Central Time. So traders are also watching. We've got about $6.5 trillion in notional U.S. options expiring today. It's known as triple witching. It's an event that is seen as one of the largest expirations on record. The triple witching occurs on the months of March, June, September, and December. So that's where you're going to have your big expirations take place, not only on the futures, you also have the futures options expiring as well. So again, watch that level here. If the market does take out that low, that 59.69.5, could open up the door for more liquidation to come. We will have some economic data coming out today, which is Philly Fed and the business outlook that comes out at 7:30 a.m. Central Time. Not a real big mover and shaker here. We'll want to see and we'll note, is it a big miss on the number? Is it going deeper into correction territory? Because it will give you some insights as far as different areas, different regions around the country, specifically Philadelphia, and how their industrial setup is in their business outlook. Now, if you look at the gold market, down about $15, getting down to that critical support around 33.50 before bouncing back at 33.71. So it is down $15, and it's heading for its first weekly drop in a month. And they call it due to easing geopolitical tensions, but the reality is we're just kicking the can down the road about 2 weeks here. We did have the Federal Reserve. They warned that they are watching inflation. They're not looking to cut rates anytime soon. They took off one interest rate cut into 2026, 2027. That lifts the terminal rate, and what happens is markets had to readjust, and that's where that gold futures really struggled to maintain any gains above 3,400. So the level to watch on the gold market as far as resuming its rally would be about 34.10. If the market could break out above that, it will come out of this parallel channel that we're seeing, and we should be able to test some of the higher regions here, make new all-time highs, potentially go to 3,600. Goldman Sachs calling a year-end target of about 3,700, and then a 12-month target, so looking at mid-next year at about the 4,000 level. Looking at the silver market, kind of a disappointment. Market has this perfect flag pattern. This pennant breaks out to the upside. Not a lot of follow through there to the upside. And then we've seen some broad-based liquidation. The Wall Street Journal did highlight a report here, so you don't have to search for it. I'll just give you a couple of key details as they talk about, the metal hits its highest level in a decade, and what that does is it triggers a couple things. They say that a lot of investors, a lot of the stackers in the silver market, you've got a couple different ones. You've got the people that have been long from the $15 and below level. Those people are tending to let go of some of their precious metal here as they've been in this for so long here and monetizing some of the metal. And then you've got your longer term stackers that continue to dollar cost average regardless of the price. So they're less influenced by the price. They're just continuing to increase their hoards. Now they do talk about the industrial demand side of things, specifically from solar panels. And this was something that we noted on this program was that, Trump had unwound some of the renewable energy initiatives. Sorry to get that out so hard. And what we saw was all the solar stocks, they got smoked, and you had silver futures break out to the upside. So a real disconnect, and that's where I talked about, hey, maybe it's moving on its own animal spirits here. So they also talk about a lot of the selling that's taking place at the coin shops, and then also the risk is really to the solar sector, especially in China, where they're looking at some of the trade restrictions with the US and their energy policies, and they think that China front-loaded a lot of that solar panel, that demand, and also the selling of it, and they think that it might have a little bit of a lag in the second half of the year. So they say that another risk here, and this is one that I talked about loosely, was that the manufacturers, they might swap out silver for cheaper metals or reduce the quantity that they're using if it gets too expensive. That's why a lot of people will tell me that they think silver's going to like $100 or $200 or beyond that an ounce, that it's, you know, so dramatically undervalued, and they cite the gold-silver ratio. The reality is when you get the manufacturing side of thing, which makes up most of silver's demand here, you're gonna see them, well, they'll start to use copper, and then they'll use a silver powder that goes over these types of components here. So they'll start to swap out, make some adjustments. I'm not an engineer. I just read a lot about these different things here, and I'm just letting you know that oftentimes the cure for higher prices is higher prices because they swap out different things. The cure for lower prices is lower prices because of the fact that they'll stop producing this element, and then things will happen, some development will take place, and you'll get a short covering rally in the market. And then what happens is that every bull market is born out of a short covering rally. So that's how that market sets up here. So looking at crude oil, they talk about crude oil futures, another wild swing here, up about 37 cents, high of 75.74, low of 72.57. A lot of volatility. That's really where all the day traders, all the players have gone into that market. The option premiums are quite high. That market is triggering a lot of emotions. I actually found a great report that talked about the price action after, like 5 days after a war and a conflict takes place, and then 30 days after. And we have to see what the probability and what the likelihood that this is going to be really strung out for a long period of time, like the Russian-Ukraine conflict. That's where we've seen oil prices continue to maintain. It popped like 30% in the first 5 days, was up 18% in the next 30 days, and has still continued to maintain higher, 90 days out. Do we have that type of scenario, or is this just a flash in a pan for the crude oil market? So we'll want to continue to see that. They cite a 50% chance that this turns into a longer drawn out period of time. They only give it about a 20% chance that the US makes these aggressive strikes, the Straits of Hormuz is closed down and things like that. And then they also give it about a 30% chance that there is a peace agreement that has been made, and that could put crude oil prices back down into the mid to low 60s. So the most likely outcome is that crude oil futures will maintain this kind of 75-ish region here on either side of it for the indefinite period of time while we're continuing to monitor these developments here. If you look at the copper market, copper futures pushing up about 3 cents after a liquidation back down to support. The thing about the copper market, every analyst is coming out with very bullish predictions on the copper market, citing that big drawdown at the LME, citing some front loading ahead of tariffs, and the expectations that 25% tariffs do go into effect on copper and copper imports. So any kind of dip in the copper market has been aggressively met with quite a bit of buying. You look at the ETF flows, the exchange traded funds, they added about 11,000 troy ounces of gold holdings in the previous session. Still the sixth straight day of growth here, longest winning streak since 2021. The ETFs, where all the action's at, is really in the silver market. They added 3.26 million troy ounces of silver in the previous trading session. So that was another big jump. And then platinum continues to see a decrease. You look at gold up 7.9%, silver up 6.4%. Again, that's one of the higher levels we've seen all year, and platinum has gone negative on the ETF holdings. So really, anybody who is a long-term buyer in platinum back in the 900s and things like that, been holding on to ETFs and futures, are starting to liquidate some of those positions. So they do talk about platinum, and the imports of China reached the highest level in more than a year, showing some signs of solid demand coming out. And the inbound shipments were 12.6 tons in May, 8.8% from the previous month here, and it's one of the highest that we've seen in the last year. Gold silver ratio 93 to 1, two handle uptick. And then you look at some of the currencies here. Dollar index slightly weaker. It is down about 9% on the year. Had a small bounce, about 0.5%. That was because of the Federal Reserve, but the dollar index should continue to resume its trend lower. That's where people are looking for buying things like silver, gold, and copper as some kind of store of value. One market to note here, we had that big jump in the wheat market, pulling back just a little bit here. We'll have to check the weather on that. We do also have soybeans pushing up, and it's at the top end of a channel, looking like it could potentially break out. And you got corn futures right near the lows, looking to surge up just a touch. Bitcoin is something that we've had a lot of interest in the 104-ish area, got down to that level here, hitting a low about 104,000. Now it's up about $2,200, and it's really because of the pause in this war effort that's taking place. So, you guys got any questions? I'll be on the Schwab Network here later on today. You want to open up a futures trading account, send an email to info@bluelinefutures.com or call the trade desk here. Let them know how you heard about Blue Line Futures here. We'd love to interact and talk about where people had picked us up here, whether it's on one of the third-party outlets where we put a lot of content, or if it's on CNBC, or you're checking out the Metals Minute here. We'll be sending out an update on the chart pack here later on today. And if you guys got any questions, give us a call. And remember that futures and option trading, it does involve risk of loss. It may not be suitable to all investors. Good luck and good trading.